appreciate you guys asking me to come, and I've been doing this for over 40 years. Started as an independent agent and never had any appointments, so I basically just was a madman, called every president of every insurance company, and luckily I was able to write rafting guides, helicopter ski guides, and anything in the recreational business, which back in 1985 was what insurance companies said you couldn't insure because people got injured and then died, quadriplegics, avalanches. And, so at that point I saw or believed that recreation was probably the easiest thing to defend because you have assumption of risk, you have release forms, you got lots of things that in an auto accident or a grocery store slip and fall you don't have. But every lawyer in the country told me I was crazy. You can't win. You just got to pay. And now it's trucking insurance and other things are like recreation was. But the recreational classes were under attack by the lawyers. And the insurance companies basically said we can't insure this stuff. So since 1979, I've been writing all the helicopter ski guides. We have deaths, we have accidents, and that's our job as an insurance company. When you take somebody's money and then they present you a claim and you cancel them, common sense to me says, well, what did you take my money for? Did you think I was never going to have a claim? And that's pretty much true, right? They underwrite and they try and carve out everything, wind, flood, hail, assault and battery, the stuff that everybody needs. And I basically say we farm lawyers as an industry. The lawyers are growing, right? The TV ads, the commercials, how they compete with Liberty Mutual and AIG. Where do they get all their money? Because it's coming from us and we feed it. The fire's out of control, and we wonder, why are these guys suing us all the time? Well, I think it's because as an industry, we don't do our job. So anyway, I was an agent for 15 years here at UConn, wrote nationwide, and I got sick and tired of stupid insurance companies and even stupider lawyers. So in 1988, I took a case to the Supreme Court in California and won. Guy fell out of the raft and drowned, and it was a sad deal. But you don't have to pay people unless you're liable, right? It's the best court system in the world if you don't let the bully take over the playground. Right? If you're afraid of the court and you're afraid to go, actually win the game, then you've given up the opportunity to win, and that's where we're at as an industry. 98% of all cases are settled. And I would tell you that they're overpaid, right? I got my own personal stories. The biggest Lloyd syndicate I did business with for a long time because I was a shitty little C-rated insurance company, so I issued Lloyd's paper. And I would go to agents and I'd say, hey, I can write anything you can't write, call me. I can write it today. And they'd say, well, you're a shitty little C-rated company, I can't write with you. And I'd say, well, I can issue Lloyd's paper. Right? In some places that work, in Texas, they don't like Lloyd's. They'll run you out of their office if you tell them you issue Lloyd's paper. So today I'm A-rated, all 50 states, and I can still do anything that makes sense. But defending our insureds is really our job. And on first-party claims like homeowners, we need to make happy customers. So I used to be a State Farm customer, and not very happy with Jake. I've called personally to talk to him. And they don't make happy customers. Some guy runs into my boat. I expect State Farm to take care of me. They don't. I own an insurance company, and I have to manage the claim. I sit there and think, well, what if it was one of your customers, right? He doesn't know how to manage the claim. He's going to be calling you, the State Farm agent who I use, calling me saying, oh no, we'll fix this. He is powerless. He has no say with State Farm on anything. If you fit the the box, you fit the box. You know, independent agents like you guys have an advantage because you can go find solutions. The State Farm guy, you go read your policy and you read the exclusions, and they say, Mr. State Farm, I need coverage for that. Sorry, can't help you. You know, you as an independent agent can go buy a standalone policy. We write a lot of standalone assault and battery, sexual abuse and molestation for churches. So again, we don't have an appetite. Everybody says, what's your appetite? What do you want to write? You write homeowners? Yeah, I write homeowners. You write trucks? Yeah, I write trucks. You write exotic cars? Yeah, I do it all. But I don't want it bad enough to beat some other guy's price. Right? The guys who are cheap, they're not going to be writing it 5 years from now. So, you know, I think insurance is old-fashioned, stupid, doesn't make sense anymore. So, you know, here's the box that everybody wants, right? It's changing all the time. The box they had 5 years ago isn't the box they have today. So we have a clean slate. We basically color outside the lines and we develop new products all the time. I write my own homeowners now. And I write a lot of homes in California. You know, the rates are, I mean, it's stupid, right? It was like 15 cents, now it's $4. And in California, the people are rich. That's what I always tell these guys. It's like, you know, I can't get insurance. I'm like, well, you're rich, right? So I can help you I can help you with an insurance policy, but, you know, you need to tell me how you're a good risk. And, you know, most insurance companies write classes of business. And I always tell people, look, I don't write classes of business. I write classes of people. Right? If you're a good homeowner, I'll write you. If you're a dirtbag, I don't want to write you. If I can't make you happy, why would I take your money? Right? And so, as a company, we talk to every insurer. Right? You have a client today that needs a quote, I can give you a quote today. I don't care how small or how big. But you have to give me a complete submission, application, loss runs, and then you have to give me a target. Right? You have to say, he was paying a 25-cent rate, I can get 50. And then I'll call you and I'll talk to you about it. I'll give you a range. I'll probably say, look, we're probably going to be 50 to $1. Because I like to, you know, have a range. And then we have a call with the insured. And we talk about how we're going to make the insured happy. Right? The biggest thing I hear is that insurance company paid that claim and then they canceled me. And they shouldn't have paid the claim. Like, yeah, well, you should have interviewed the company before you paid them that cheap premium. You should have asked them, what's our plan if I have a claim? Right? If I don't have flood, how are we going to manage a claim that has partial flood? You know, that you got to have other flood coverage or you got to have some money. That's how simple it is. So, you know, I insure a guy in California, can't use his name because they get mad. He has a $30 million house. The agent calls me and says, look, he's closing. He needs a homeowner's policy tomorrow. I'm like, okay, I can do that. Get him on the phone. First, he doesn't want to get on the phone. He wants his lawyer, his manager on the phone. I said, well, I mean, that to me tells me you don't want to come out from behind the curtain. So why am I going to trust you? You know, you're too important to talk to me or one of my underwriters. That's not a good way to start a relationship when we're trying to solve a problem. So anyway, he's not getting a loan on the phone. He says, I'm paying cash. I don't have a loan. I don't need insurance. I said, well, $30 million, the price is going to be X. He's like, I don't want to pay that much. I only want to insure it for 15. So right there, that tells me he wants to pay half of what I gave him. And I'm like, you know, I can do that, right? But I'm going to issue it for 30, and we're going to share the risk half and half. So if you have a $100,000 claim, I'm going to pay half, you pay half. If the whole thing burns down, you pay half, I pay half. That's how you get him $15 million in coverage, and you do it a way that you can, I have to be able to enforce my contract. And that's the problem with everything we do on first-party claims. You know, if you follow Florida, right now they're talking about calling a special session in legislature to change the laws. Right? We don't need to change the laws. We just need to do our job right. When you take somebody's money, give them wind and flood. Don't exclude the things they need. Right? That's how you make lawyers very wealthy. Right? Lawyers love suing insurance companies. I know we make unhappy customers, right? We got to change that. As an industry, we need to make happy customers, which means you need to tell them stuff they don't want to hear. Like, you got to pay the right price. You have to insure the value. I got guys in Florida sending me homes and condos, and I just say, what's the square footage? How much you insured it for? And I'm like, so you think you can build this back for $135 a square foot? You can't. Well, I got a contract, gave me a letter, says he can do it. I'm like, I don't give a shit. All right? This is real simple stuff. It's construction cost today, right? It's at least $350 a square foot. You can build a chicken coop for $135 a square foot. I know that because I insure chicken coops. So, it's really, really simple if you keep it that way. But, if an insurer tells you, I want a cheaper price, I don't bite there. Like, go get your cheaper price. If it's a banana and you can go get it at any grocery store, you don't need us, right? So we offer what's called a true umbrella, which, if you guys sell umbrellas, any of you sell umbrellas? They're not umbrellas, they're excess. It's got holes throughout it, right? If your primary policy excludes the dog, the trampoline, the diving board, off premises, if you're a soccer coach, whatever, that's what an umbrella used to cover in the old days. Now you buy following form excess. So we're the only company that I know of that offers a true umbrella, right? So whatever inadequate insurance you have under you and all the exclusions, we'll give you an umbrella up to 10 million limit, and we will cover your diving. If you got a motocross track in the backyard, we don't care. That's what you're supposed to do. Now, if I insure you, I'm going to have some requirements that, you got to make sure it's safe. It's got to be fenced. Right? Kids who come over, you need to let their parents know they're coming over, have them sign a release form. There's a way to do all of this. And eventually, we do have claims. Right? Doesn't matter whether it's a trampoline park or your backyard. Eventually, you can have a claim, and then that's our job, is to keep insuring them and help them through the process of the claim. Not cancel them and throw them under the bus and then start fighting with them, and the lawyers make all the money. So again, let's stop being lawyer farmers, and let's start approaching this stuff the right way, which is, you gotta have flexibility. And I would tell you that as an agent, it's really tough, because you sit down with your insured, you read the exclusions, you're gonna say, okay, now what? And you're gonna say, I don't know, dude, those are the exclusions. I can't do anything for you. But you can call Prime, then we can customize a policy and a solution for, everybody says, well, what's your minimum? I don't have a minimum. Yeah. I write dog policies for $200. I write police officer policies now. They all only want a $25,000 limit, because that's what the immunity now has gone away, and they're liable for 25. You probably want more than 25, but if that's all you want. And as a company, we always quote higher limits. And that's to protect you, the producer, and us, the company. Because one of the favorite lawsuits is you didn't offer me more coverage, and I needed it. How simple is that? You just give them higher limit quotes, and then they can't accuse you of that. Really, this stuff is so simple, a caveman could do it. That's why I'm pretty good at it. I'm a basic caveman. But, Prime, they rated all 50 states. I have reinsurance with all the biggest reinsurers in the world. And they all want to do business with me. You know why? Because I send them checks. It's kind of like your insurance. As long as they send you checks, everything's good. The minute the company has to send them a check, they're canceling it. They're going to cancel that guy because he had a claim and he wasn't supposed to. That's the biggest, thing that we need to really change is if you do it right, whether they have to claim the first year or the 10th year. So, if you have a $5 million house, what do you think the premium should be? Let's just do simple math. Every 100 years, it's going to be wiped out. $5 million, that's 50 grand a year in premium just to break even. You know what a $5 million house costs for insurance? About, $7 grand, it's nowhere near adequate to be able to actually make your customer happy, unless he never has a claim. That's the problem with all of this. I don't hire actuaries to tell me how to lose my money. We can do that all on our own, right? We can look at risk. So I wrote the Rolling Stones concert. So when I was 12, my dad insured Evel Knievel's Jump of the Snake Canyon, and I went to it and tell people that's really when I started my career, because I was learning stuff and I didn't even know it back then. Most recently, the Rolling Stones did their tour, and they couldn't get coverage from London for death of Mick or Keith or Ronnie. The drummer we already knew was not going to make the tour, and he did die. But you know, 20 million in coverage, London would have written for about 100 grand. They paid $12.3 million on the Stones' last tour because Mick's girlfriend committed suicide, which wasn't a covered claim, but Mick sued them and they paid anyway, which I would have never paid. My contract is my contract. I'm not going to let the bullies force us into that. So, you know, nobody wanted to write them. They have a bad history. I actually talked with Mick and Keith on the phone because that's my rule. I'm not going to insure you unless, you know, and I wanted to see them and see that they were healthy. So, you know, I had no idea what I could get for that. Right? They wanted 20 million in coverage. We whittled it back to 10. And, you know, we got 3 million in premium, which to me is extraordinary. Right? If I had hired an actuary, you think he'd ever help me get to 3 million? There's no way. It's about, you know, what can you get? It's not about, you know, agents call me up, I sent you an app, give me your best shot. And it's like, dude, I don't shoot in the dark. That's not good with guns or insurance. You know, I need to kind of know how I can do it. Most people I help are fed up with, you know, insurance companies and lawyers. They're the target of lawyers. And anytime anybody has a serious injury or accident, you're going to become a target of the lawyer. And that's where, again, I'm an insurance consumer. Right? I don't want to sell you or your client something I wouldn't be happy with. And so that means we have to do the tough jobs and, you know, defend claims. I've taken many cases to the Supreme Court in the United States now and won all of them. I sued Beasley, the biggest Lloyd syndicate, and won here in Utah. They paid a $6.5 million claim they shouldn't have paid. You know, CV Star, same thing. You know, I've been in battles with the biggest insurance companies on the planet, and they think they're going to intimidate me into paying them. Right? You don't have to be. It's the best legal system in the country as long as you are right. If you're wrong, you should have gone and paid the claim immediately. You don't make people upset for years and years. All right, so again, reporting claims, when I do a quota share instead of a deductible, now they report their claims, which is part of the problem with habitational is to now have a $100,000 deductible. They don't report stuff because they're trying to keep the claims off of their claims run. Right, with a quota share deductible on liability or property, they'll pay 10%, I'll pay 90% of every claim. Or they'll pay half and I'll pay half. But I help them manage the claim. You know, these guys come to me and they're like, I got a $100,000 deductible, I got my own claims guys. I'm like, you can't even run the trucking company. Now you're a claims expert? Well, I got my own lawyer. I'm like, is he the best lawyer? You know, I hire the best lawyers. That's how you win. You don't fight litigation by trying to save money, which is what most insurance companies do. They go out and, you know, what's your rate? What's your rate? Oh, he's giving me a better rate. You really want the cheap lawyer when your business or your life's on the line? I don't. So, you know, we play to win, and you never give up the goal line, which is what I think we've done in our businesses. We sell 98% of the time. Right? So you can't make the winning shot. You can't score the touchdown because you've given that up. So, you know, when somebody sues you, our lawyers, the ones I hired to defend, are always going to say, you know, they want $3.5 million. Like, yeah, okay, what do you want to do? Well, let's offer them 50. Like, so is that gonna settle it? No, but that'll get the game going. It's like, I don't wanna offer them anything. I want them to know we're going to court. They can always make me an offer I'll accept, right? But I'm not gonna start the ping pong match for the win for them, and we've given up the win for us. So when you're right, you don't negotiate with terrorists. You basically head for the courthouse. So anyway, I've gone too long. Any questions or comments or complaints?
One quick question for the benefit of everyone here. Let's say they want to talk to you about policy. Do they just call your office? How do they get going with you?
Call me. My direct dial number is 801-304-5510. And, you know, I have 58 underwriters now. And if you're going to start doing business with me, I'd like you to call me first, and then I can help shepherd it through, because as everybody, you know, everybody I insure, you guys, we all are challenged with hiring good people, right? So I'll get calls all the time. They'll say, yeah, I talked to Jim, he said you couldn't do it. Like, well, Jim was wrong, we can do it.
Hey, Greg, I have a question. You mentioned insuring for construction costs today, not for obviously building chicken coops, but houses. Are you seeing more issues with homeowners being underinsured?
I think that's prevalent. You go anywhere in the country, that's how people get a cheaper price, right? They just reduce the value. And I'm like, you know, that's what you want. Hell, I can reduce it even further. You know, but that's not going to make for a good claim scenario, and then we get sued, right? We really need to raise the bar and just tell people, look, no, it's simple math. What's the square footage of your house? You know, Naples, Florida, $135 a square foot. I don't think so. You know, so it's the biggest issue, because if your prices are going from 25-cent rate to 50, that's bad enough. But if the value has to go from $1 million to $2 million because they're underinsured, now you got the double whammy. You got the price increase and the value increase. And most people are like shocked, right? Which they should be, you know. Again, these people are rich. Florida people, they live down there, they expect cheap insurance. I'm like, you live in Florida, you're rich.
There's crocodiles, no less.
Good question. Are you in all states right now?
Yeah.
And as far as your non-standard homeowners, are you also in California?
That's probably our biggest state right now. Because everybody's running out, like the building is burning.
What's lead time? How much time do you need to get close out?
I mean, we don't quote stuff more than 30 days out. Right now, I got people to call and say, you know, this is July 1st, I want to present a quote June 1st. I'm like, yeah, well, good luck. Because, you know, July 1st is a lifetime away, and the market is changing daily. So you want me to shoot 30 days before, you know, the incumbent or the controlling agent isn't going to give his last quotes until like 11th hour. So I can quote anything same day. Literally, you have something today, I don't care what it is. You need it today, send it to me, we'll talk about it, and I got to talk to the insured. Once I talk to the insured, I give you a firm quote.
What are all the lines of business you guys cover? For VL, umbrella, home?
Everything but work comp.
And work comp.
No work comp.
And do you like the stuff that generally can go to like an auto source, maybe quote that kind of stuff too? You can be well on that.
Again, RLI, which I don't know if you guys know who RLI is, they're one of my shareholders. And yeah, if RLI's quoting, you know, auto owners, you know, normally they're so cheap, it's ridiculous. But, you know, when auto owners is canceling it, and it's going to Berkshire Hathaway or Nyco or Progressive. I mean, Progressive is the one that I think kind of spans the whole deal. They'll be really cheap. I've seen them quote $81,000 for one truck. And I told them, you can't afford $81,000, you know, that's everything you make in a year. So, but the trucking prices are, you know, probably, I don't know, 10 to 30 grand a truck. Right now, which they used to pay 4 to 6 grand a truck.
talk just a little bit about the risk management advice for the normal homeowner? We talked about the $30 million home and sharing the risk. And we find, homeowners, they do have trampolines and, swimming pools. And the homeowners have a little side hustle. My kids are mowing lawns and, right, doing these things. What is maybe some risk management advice we can give to the normal homeowner, not the $30 million homeowner?
Well, again, we write more $500,000 homes than we do $30 million homes. And I would tell you that, we have what we call work, home, and play. So if we're writing your home, we need to know really what you're doing during your whole life. Right? Work, home, and play. So work, what are you? Right? You're an architect and you're helping, your buddies do stuff on the side. We want to make sure that we're covering all that stuff. The trampolines, the diving boards, once those are scheduled, then we have our own in-house risk management department that deals with each one, gets them the release form, we'll check the fencing, and we try and visit, every place. Again, we would depend on our local producers to help us do that. And so we rate every insured on a scale from 1 to 10. Right? If you meet somebody and you think they're 10, kind of like marriage. And, over time, they're not. They're not a good client. They're more of a pain in the butt than they are. And so, again, I want to reward my best insureds. Right? Like big trucking companies, if we trust them and they're reporting everything, they don't have to change vehicles. They don't have to change drivers. There's no service work at all, which saves us money and them money. But if you can't trust somebody on how many actual trucks they have working for them, then you can't give them a composite rate. And, when we identify something, like, need to change your agreement. If you're a landlord and you're requiring renter's insurance in the contract, but you're not actually, nobody actually has renter's insurance, that's a problem. You should probably take that out of your contract. Yeah. Or you should have a forced place renters program, which we do, where every month, anybody who doesn't prove they have renter's insurance, you add $10 to their bill, and you give them forced place renters insurance. So, and if you don't do that, A or B, then we're not going to insure you. Right? If I need some wording in your release form, and I tell you, look, you need to change it. And you say, my brother-in-law is a lawyer. He says you're wrong. I'm like, okay, well, go buy insurance from your brother-in-law then. He doesn't know. And I'm the one risking my money. And I think, again, as Prime, I started it, when I did a couple million in premium. This year will be over 500 million. And, the reason that it works really is because I never was able to raise any money. If I had to raise money from some of these big investment banks and stuff, they'd be telling me what to do. They wouldn't let me, and my reinsurers, I don't accept any exclusions. Like towing, repo, or coastal, or all the standards. It's like, you want to put any of those on there, hit the road. Because that's what I do. I do all the stuff that's traditionally excluded on, most reinsurance contracts. So, but the risk management is initially, you basically give them, we may find stuff down the road, we want your cooperation, we want to discuss it with you, and there's certain things that you can make a decision on, right? You do the forced place renters, or you take the requirement for renter's insurance out of your contract, A or B, we don't care. But we can't live with kind of a bad result because we're not thinking ahead of the ball. It's a lot like sports or the playground. There's a bully, think ahead of the ball, pick the right players. In the insurance business, nobody cares, it's cheapest. Right?
So have you done a lot of cities that provide all this recreational sports stuff? For instance, I'm a soccer coach of a 14-year-old group of kids.
Right.
And things like that. But cities are always inadequately covered, or they do your background check and they all do a background check on whoever's coaching and things of that nature. Just out of curiosity, you presented stuff to cities that they look at and go, yeah, that would make more sense if we're insured properly or.
You know, and I would tell you that most of the sports leagues are not covered properly. And, you know, I'm waiting for that to kind of blow up, but again, you know, they have liability insurance and it excludes participants.
Right.
Stupid.
Yeah.
And then they buy a medical policy for every player, 50 grand. And so they come to me and they're like, yeah, we're getting sued. You know, we're getting canceled on the liability side. And I'm like, yeah, how's that medical side doing? Oh, we make all kinds of money on that. I'm like, yeah, because when somebody gets injured, you pay them, right? And the numbers work over there because it's low limits. And then they sue you with the money you paid them. All right, so how about we give them one policy that includes medical, which all of our policies include excess medical. We don't provide premises medical, which is a benefit you have to just pay when they demand. So we craft our policy in a way where I can pay your medical bill, but you're going to sign a release form. Oh, you won't sign a release form? Okay, we'll see you in court, right? You don't fuel the problem with one product. And again, this is my personal opinion. The agents that write that crap, they make way more on the medical side, right? The commissions are, I don't know what they're like, 50, sometimes 100%, and it's a 3-year policy. So, you know, again, I think in our business, we don't do a very good job of being fiduciaries. We're looking at how much we're making, and I think that comes true. When you don't worry about that and you treat your customers the right way, everything works out a lot better. But if you're looking at it saying, well, I don't want to combine these policies because I'll give up the golden goose I get over here, which is a $50,000 or $25,000 medical for soccer players, hockey players, whatever. You know, everything in America comes to liability. Eventually, you're going to get sued when people get injured. So an all-in-one policy that gives you the medical, where you can settle it if it makes sense. And if it does, if they're not going to settle it, then you don't have to pay. And you'll settle or win in court. The two policies separation, I mean, it's getting worse, so I know that's going to become an issue.
Well, you've got all these club teams that have formed, right, that are more on the level of, these are kids that are going to go on and play professionally. And I know they're underinsured. I know that kind of stuff's underinsured, but I know full well.
We're pretty close to writing the California Youth Soccer Association. We've been quoting that for the last couple of years. My dad actually started youth soccer here in Utah, and so, you know, it's something that it just is what it is. Right? It's like homeowners in California. I could have gone down there and told them all, hey, trouble's coming, trouble's coming. You know, they wouldn't have listened to me. Now, you know, trouble's here and they all need a solution. So a lot of it is just being patient and, again, seeing the end of the ball. You know, my Bible is the AM Best book. You guys probably don't know what that is, but it's a green book. And when people come to me and they say, oh, I was with AmTrust, or, you know, I was with Kemper, or whoever, you go in the AM Best book and you look at their results, they've never made money. And I'm like, so did anybody ever look at, you know, I mean, would you build a house with a builder that's going broke, that doesn't make money? And then, you know, most insurance companies' expense ratio is 40. Mine is 20. Right? So as an agent, never made sense to me. How do you guys spend 40 cents of every dollar? You know, an insured gives you $1 million, they have a $600,000 claim, and they're like, you made 400 grand, right? You're like, no, we lost money. They're like, what the hell? How'd you lose money? You know, and so the expense ratio is something that, again, we need to deal with as an industry. And, you know, our model is we pay, you know, what I would call standard commissions up front. We don't give our pen away. We do business with wholesalers and retailers, but we have a profit share. Right? So my best producers can earn up to 22.5% commission. As a retailer, you get paid 10 up front. As a wholesaler, you get 15. And you can actually put some of your commission at risk and make more than that. Now, that doesn't excite any agents, right? They're like, yeah, I'm not really into profit sharing. I want all my money now. And why? Because they know there's no profit sharing to be had. All these companies lose money. They're all at 100 combined or more. So why would you be excited? Well, look at my numbers. I run at a 75 combined or less for the last 40 years. So I make money. So if I'm betting on me to make money, good agents ought to bet on both of us that you can bring me good clients and we can both make money. So, but, it is about partnerships. It's about partnerships with producers. More importantly, it's about partnerships with the insureds, because they are the wild card. They're the ones that are going to be really happy, or they're going to be really mad and suing us. And I like being sued by lawyers. I don't ever want to be sued by my insurance, right? That's a mistake. You should have never taken their money. And so, we give assault and battery. We give sexual abuse and molestation. All of those things are a crime, so you don't need to exclude them. They're already excluded, right? So why do we add all these exclusions on our policy? Because then we don't have to do our job. We can just say, oh, we don't have to cover that. We don't have to cover that, right? That's why we're making lawyers rich. So again, we don't want to exclude anything. We want to include it all and do our job underwriting, charge the appropriate price, have a claim, manage it, and we keep insuring. Anyway, again,
Great, thank you very much.